Forex is a business where they earn a lot of margin, right? So this is a big business for them, and they have huge uh, entry barriers and moat. While travel services is a business where they have been able to generate a lot of float. How they generate a float? Most of the travel bookings by anyone, any retail or corporate happens in such a way wherein you approach Thomas Cook. Thomas Cook makes a plan for you, uh, gives you a total estimate how much you have to pay. You make that payment, and then say 1 month later or 2 months later or maybe 15 days later, you're going to enjoy that vacation, right? So Thomas Cook gets that money from all its customers upfront, and they have tie up with several agencies where they make the payment to them 1 month, 2 months down the line. So between that, for a 2 month period or a 2.5 month period, they have this huge amount of cash flows lying with them, which they can manage in their operations, right? So that is a beauty. Even though if you look at the travel business, they're not making huge margin, but that business generates a lot of float, which acts as a very good working capital for their day-to-day business, right? And that is where if you look at the balance sheet of Thomas Cook, they are debt-free. They have good cash flow, and the balance sheet strength is there, right? But in case of Forex, what happens is Forex is not so much in terms of cash, as in you don't get a float, but in case of Forex, you get high margins. How do you get high margins? Because you have huge scale advantages, and you have developed the logistical ecosystem which you have created over decades, not today. Okay. And Thomas Cook is the only fully integrated travel, foreign exchange, and travel operators willing to compete, as they have foreign liabilities to pay hotels and airlines, right? So they're completely hedged, and they can continue to be completely hedged in the sense that whatever float they have in their foreign subsidiaries, they never convert it into Indian rupees and then use it for India. They keep it like that only because they don't want to have that kind of a risk of uh, forex depreciation or forex appreciation risk, right? So they keep it in foreign, and that allows them to make it freely available for their customers. And again, so many customers are there, so many cards, so many transactions. So the customer concentration risk is very low over here. And this is something which requires license, and not many people is going to, it's not easy to get an RBI license for this. In fact, Thomas Cook is the first non-banking category, first in the non-banking category to issue its own easy to use branded Forex prepaid card solutions, right? And many people say that abhi to you can you can book Forex online, and why do you want to take Thomas Cook's foreign exchange thing, right? But see, again, like I said in the case of Club Mahindra, in real life, you don't take decisions taking out the calculator all the time when you are traveling, right? Why? Uh, we have covered this part fairly in detail in our report. We would recommend you to go through the report once again if you have not done it. Specifically that part. Why do why do customers of Thomas Cook will opt for the Forex uh, proposition of Thomas Cook and not take outsiders thing, even though the outsiders may offer them a better deal, right? The reason being, number one is you are already you have taken the whole package from Thomas Cook. They are managing everything, and you have a trust over that company over so many years. And then you are not going to check on because you don't want to risk trusting an unknown person in a foreign land with those, what do you say, foreign exchange, right? Secondly, even though you know that there are online options which are available for Forex, you still don't know how easy it will be. Thomas Cook offers you a convenience wherein you get that card and you can, with that Forex card, you don't have to go back and check and discuss it with or follow up with people and then make use of that money. But it is there available. So you get that freedom, you get that convenience. Those things are difficult to put value on a numeric basis. But in real life, when we make decisions, these things drive our decisions, right? So that is where it creates high entry barriers for other players. And that is where Forex still, even though the earnings from Forex business is far lesser than the travel services business, but Forex business generates most of the profits or margins for Thomas Cook. So this is the beauty of their business, wherein one business gives them the float and keeps the working capital intensity lower, and the other business gives them the margin. The losses which you see on the screeners or on their annual reports is because they have been investing heavily in newer expansion, and that has taken a toll on their total consolidated balance sheet. We are not saying, advocating that this acquisition route is right or wrong. Given a choice, we will prefer a company which is growing organically and not through acquisition. So we are not very fan of this model of Thomas Cook of growing through acquisition, because acquisition doesn't only mean taking the revenues and profit of that company, but also mean to integrate the structures and to imbibe the same culture throughout the different organization, which is not an easy thing to do, right? So only time will tell whether this thing will work in the future or not. But right now, our bet is not on whether they'll be able to do that or not, whether it is going to be a big wealth generator or not. Our bet right now is the current valuation offers us a good margin of safety, it looks like. And we are betting that couple of years down the line or 3 years down the line, we'll see some normalcy in